All right, welcome to Jay Athens Live. Today is October 14th, 2020, 1 p.m. And today's meeting, I just want to talk about not really too much going on in the markets, but I do want to discuss monetary policies between USD and Euro. All right, so just looking at first things first, just looking at volatility, we still are about negative 15%. From the average, so about 15% lower. So we're still in low volatile areas, but we slowly been picking up, for the past couple of days on volatility from the negative 20. So what I want to point out is we have Brexit coming up. We have the Euro in talks with the UK about Brexit, and then we have the US with the elections coming up. So that's a lot of headwind going forward. So I wanted to update you guys on FOMC and ECB's latest review if you haven't checked it out. For the USD, they state that the minutes from September didn't contain too many surprises. However, discussions on forward guidance revealed that participants had different views. While the lack of chatter about any QE, so what we're doing right now, we're trying to find a tone out of what I'm going to read to you. So there is lack of chatter of QE or tweaks on the current program that were judged to be somewhat hawkish. So they're talking about liquidity in a sense. So let's take a look. So looking at USD, see, this is why the talk is not there, because there's only a 2% increase from July. So we see that they're slowing down on QE purchases just a little bit. They said that regarding forward guidance, the statement read that it would be likely to be appropriate to maintain the current target rate until labor market conditions were judged to be consistent. So that's another, we would say that's a bullish tone, because they're keeping interest rates right where they are until any changes in the labor market. All right, so they're looking for maximum employment and inflation at 2%, which we see right now. Inflation for USD is at 1.7%. We're looking at it based on the core. So we're almost there. It said, however, the minute said that couples of officials wanted more explicit guidance, with these officials preferring to wait until inflation had moved above 2% to make any adjustments. So regarding asset purchases, there was almost nothing that was incremental on the themes of amount of purchases, and that refers back to the central bank's balance sheet. So there's nothing that is out of the ordinary for USD. It says, as well as maturity profile, some officials have commented on these themes in the wake of the meeting minutes. So it may be the case that we hear more in the months and weeks ahead. So right now, based on what the minutes are saying, there's somewhat of a bullish tone, because the USD has a better footing when it comes to their monetary policy. As far as ECB, when we talk ECB, we know we have that upcoming meeting with the UK as far as Brexit. So that's risk in itself. The meetings for the ECB revealed a cautious assessment from policymakers, more specifically from economist Lane. Lane said there was no room for complacency, adding that inflation had been persistently low, below levels for a long time. So if we look at inflation on Euro, see, we're actually going lower into inflation right here. As far as the core, the month to month is picking up, but that's a 30-day thing, so that moves pretty fast. The headline is actually slowing down, so we see it's in line with what they're saying as far as the meeting minutes. They also noted that downside risks to inflation outlook stem from any potential further appreciation of the exchange rate. So here's the thing. Isn't this funny? The central banks are saying the stronger that Euro gets, the lower inflation goes. So when we look at it from a chart basis, that's a tough position to be in, because the stronger it gets, the lower inflation. And if we know it, the lower inflation gets, the more value the currency loses. So they're almost like in a no-win situation. Lagarde stated that the bank will continue to monitor the euro, and they do not target a specific level. So you see what they're doing. They don't want to put anything out in the air for people to, they put a price target out, people start to gravitate towards it. They don't want to do that because the higher it goes, if they did put a higher price point, the lower inflation goes. So we see that they're pretty much in trouble. Since the meeting, sources reports recently suggested that there's some discontent on the softness of language used on the euro. Main source of disagreement appeared to center around the accompanying of forecast projections, with the argument made that forecasts appeared too optimistic. So even central banks are saying that the forecast that economists put on euro was too optimistic. So that is a talk down on euro. They don't want to put too much up in the air because the value goes up if they make any, sudden statements. So it says there's concerns surrounding the fallout of declines in labor market on wage pressure. So let's see there. Let's look at wages. So no update on, I guess the pressure behind wages is starting to fuel to the downside. So we haven't seen that materialize in the wage growth just yet. So that's something to look out for. It was agreed that ample stimulus was still required. So that refers back to the central bank's balance sheet. And let's look at euro. Euro, from the time that we collected the data, they have an increase. The first quarter, they went up to 32%. The second quarter, they're up to 18%. So they're telling you they need to buy more debt. More money needs to go in the economy. And they're saying it's still required, with some trying to make the case for keeping a free hand when it comes to stimulus. The PEPP remains the tool of choice for the ECB. And it was remarked that further, now this was important, this is what I wanted to mention to you guys. There was also remarks that further rate cuts and alteration to the TLTRO operations remain in the toolkit. So we see this bubble forming, the pot is boiling for euro, and it doesn't look good because now the central banks are starting to put that in the air that further cuts may be in the playbook. So if we look at the cuts, if we look at euro's at a flat 0%, but if you look at that LIBOR rate is negative 0.5%. Anyhow we go any further, we could see some weakness on euro. So these